it has to come through sort of thing, so price could equally roll over and gun for market structure low and close beneath it. If it was to manage to run down and close beneath market structure low, then obviously that would be a signal for lower prices. So all of our bullish plans would have to be put on the shelf. Um, but still, in this example, price manages to actually run down, putting a high low way above market structure high, leaving the uptrend intact, and it's managed to gun for market structure. Sorry, it's way above market structure low, leaving the uptrend intact, and it's managed to actually gun for market structure high. And close above. So where it's managed to do that, once again, signal for higher prices, and we once again have a new range to work with. So it's just a case of rinse and repeat, really. So before I move on to this new range, probably a good time to point out the whole thing of how far they usually like to move the market back. So with the new range, obviously we can see that this is the new market structure high, and then this would become the new market structure low. Yeah. So once again, same rules apply. Now that we have a new range, we're looking for a retracement back into the range, most likely into some form of discount, like anywhere beneath like the bottom 25% of the range, because that's where it will be cheapest for smart money to pick it up from. Usually, MMs will like to drive price down there for other reasons as well. But on this occasion, price actually done a very shallow retracement before managing to run up and break structure high. And also we have a gap in the market just here. Now, I do actually remember this weekend as the French election weekend. So there was fundamentals going on during this time in the market. So, you know, sometimes when we have fundamentals, we can get a bit of weird price action. And odd things can happen in price that don't usually happen. So we have this big gap which actually didn't get filled for a while. I'm not even sure if it has been filled. And then we had a shallow retrace as well. So clearly, whatever was happening fundamentally made euro extremely bullish to the point where it was no longer moving efficient. What usually can happen in the normal market is when it comes to retracements, the MMs usually love to drive price back pretty far. Um, and that's usually mostly to do with, apart from them wanting to pick it up at a discount, it's to do with human psychological levels as well. So if I just pull a fib from this low to this high, yeah. So all the fib does is the fib just shows you how far price has come back on itself into the range. So obviously this is the whole range movement up. That'll be 100%. If it comes back to this line, it's come back on itself 50% of the way. If it comes to 61.8, 61.8% of the way, and so on and so forth.